Hey there, I'm estate planning attorney Paul Rabelais, and in this video I'm going to answer your questions about the new $16,000 annual gifting limit, as well as the new for 2022 $12.06 million estate tax exclusion amount. Okay, so in a recent video that I'll link you to up there, I told you that the 2021 $15,000 annual gifting limit is being increased to $16,000 in 2022, and the 2021 estate tax exclusion amount, also referred to as the estate tax exemption, is being increased from its $11.7 million 2021 amount to the $12.06 million for 2022. Nobody predicted that in 2022 the estate tax exclusion amount would be in excess of $12 million. A year ago, everybody was convinced it would be $1 million, $3 million, $3.5 million, $5 or $6 million. Nobody predicted it would be $12 million or more, but that's what it is. So nonetheless, just in a couple of days, that video has had hundreds of thousands of views and tons of questions. So many questions that I thought I'd use this video to answer many of them. Now, you may be able to learn more about how to protect what you have just by listening to all these great questions that have been asked, as well as my responses. And note that I may simply throw in a few comments that were made to the video that aren't questions, in order just to spice things up a bit. Oh, and because there were several questions about whether the recipient of a gift must pay tax, let me clear that one up first. The donee, we call them the donee in estate planning circles, or the recipient of the gift. Somebody gave you $10,000, $20,000. First thing you do is you say thank you, but you're what's called the donee. And the donee does not have to pay tax, neither gift tax nor income tax. So we'll refer to that a couple of times as we go through this question. So let's jump right in. All right, so JDM asked, haven't we been told over and over by some to fear the death tax? Well, yeah, we have been told all year long that the kind of experts have said our estate tax exemption would go way down, but it didn't. It went up. It's adjusted for inflation every year. 2021, it was $11.7 million. And in 2022, it'll be $12.06 million. Edward White asks, how would it work with real properties like land, trailers, and rentals? Do we have to pay estate tax as each property is sold? If the combined value doesn't total $12 million, would we not be liable for estate tax? So the way the estate tax works is when somebody dies, you add everything up. You add up the fair market value of their land, their rentals, their real estate, everything, their investments. And if when you add that up, the total value exceeds the estate tax exemption amount, which is $12.06 million for 2022, then that estate owes estate tax, and of course they owe it in cash, and that estate tax must be paid within 9 months. That's the deadline, 9 months from the date of death. So no, you don't get to kind of wait around and get top dollar for that real estate. You know, you may put it on the market and may not sell for a year or two. Got to pay that tax within 9 months of death. So many people are forced to liquidate stuff fairly quickly in order to pay the tax. And then thanks to 13160 Dennis, who wrote, that was more clear and appropriate than my lawyers and wealth advisors have been in years past. Thank you. Thank you. Poet Maggie 1 asks, what about the people who get the gift? Here's another one of those questions. Some people just don't believe that the recipient of the gift does not have to include that as income and does not have to pay tax on that gift, but you don't. Call Me Big Papa stated this channel is priceless for helping navigate estate planning. Matt Bardella asked, donate or gift? I might have messed you up because I use those terms interchangeably. We say you can donate $16,000 to as many people as you want to every year. And then you'll also hear me talk about people gifting, or you have the right to gift $16,000. In estate planning circles, we use the word gift as a verb, even though it's really a noun. But they mean donate and gift really mean the same thing. Robert D. asks, can you not also pay medical bills for someone without filing a gift tax return, even if you have already given them $16,000? Yes, you can, as long as you pay the healthcare provider. Let's say someone has $50,000 of medical bills, and you give them $16,000, and then you pay their medical bills, but you pay those bills, you make those payments directly to the healthcare provider. Then you still haven't used any of your estate tax exemption. What you can't do is give that $50,000 to the patient and then have the patient pay the bill. That would be a $50,000 gift, from you to the patient. So same thing with educational expenses. So medical expenses, as long as you pay the healthcare provider, educational expenses, as long as you pay the educational institution, those don't count. Even if it's in excess of the $16,000, it doesn't count toward using your $12.06 million estate tax exclusion. He goes on to write, my understanding is you must pay this directly to the provider, not reimburse the individual, but I don't know if the payments count toward the estate tax exclusion amount. They don't. Another question, if you file jointly, can each spouse still give $16,000 each before having to file a gift tax form? Doesn't have anything to do with filing jointly for income tax purposes. Just each spouse, regardless of whether they file jointly or file separately, each spouse can give $16,000 to as many people as they want to. If either one or both of them give more than $16,000, then the one who gave more has to file a gift tax return. Or if they both gave more than $16,000, they both have to file a gift tax return showing that they each used some of their $12.06 million estate tax exemption. Victoria Quizada asked, is there an age minimum for gifting to grandchildren? No, there is no age minimum. You may have a grandchild who's 7 years old, who's 3 years old, who's 3 months old. You can make gifts to grandchildren. Now, when you give to grandchildren, it's often done through trust because grandchildren who are minors do not have the capacity to accept the gift. So it's often done in trusts for them or put into some type of account, maybe a Uniform Transfers to Minors Act account where there's an adult custodian of the account. But there is no age minimum requirement. RDM wrote, the giving of gifts to reduce the estate size at the time of death is interesting. One might give away $10 million next year and it would be tax-free. And you're right. Suppose you die, though after 2025, when the current program sunsets, the amount of the exclusion is reduced to about $6 million from a much bigger number, and you have used up to $10 million by your giving. Does this mean you have to pay some tax to account for the lower $6 million exclusion amount after the program sunset is put in effect, and the fact that you have previously given away $10 million from your estate? Great. Or is that ignored and your exclusion from estate is simply reduced from $6 million to zero? Okay, so let's rehash that set of facts. You give away $10 million now when the exemption is $12.06 million, so you gave well over $16,000. You used most of your $12.06 million exclusion amount. And then in 2026, when the estate tax exclusion amount is cut in half, cut back to about $6 million, you're like, uh-oh, I gave away $10 million, but now I only have a $6 million exclusion amount. Do I need to pay some tax? And they've already come out with regulations on that. No, you don't. They're not going to claw back those gifts that were larger than the 2026 $6 million exclusion amount or whatever that amount might be. So you will have used it all up by making the $10 million gift in previous years when the exemption was $12 million, but that you won't have to pay tax and they won't claw that gift back. So good question. Appeal 2008 wrote, excellent, just liked and subscribed. I hope you don't mind answering the following questions. For a couple, number one, for a couple, for $24.12 million, 2022 estate tax exemption to apply, is it correct that both husband and wife must pass at the same time, say in a car accident? No, it's not required for couples to die in a common accident or at the same time for each spouse to be able to protect $12.06 million, or the couple between them is protecting $24.12 million. Now, I will tell you, in order for a couple to protect $24.12 million, at least in 2022, it's really important that you do the planning ahead of time with the wills and trusts set up properly. And when the first spouse dies, make sure you report what you need to report. May need to make what's called a portability election after the death of the first spouse to maximize how much the surviving spouse can leave when the surviving spouse dies. So, good question. In that fact, there's a couple of more points to that question. If, say, husband passes before wife and wife is the sole beneficiary via a will, then would she have to pay estate taxes on the amounts above $12.06 million, or is the entire estate transferred tax-free to the spouse, even if more than $12.06 million? Great question. So let's say husband dies. He has a $20 million estate, far more than $12.06 million. He dies. He leaves everything to his wife. No taxes due because we have the estate tax unlimited marital deduction, which allows married people to leave an unlimited amount to their surviving spouse free of estate tax. The only problem is now that $20 million is in the surviving wife's estate, and it will be taxed when she passes away. So, and a side note on that, and this will answer his next question, but when he died, leaving everything to his wife, she'll have her exemption when she dies. And if she files an estate tax return, IRS Form 706, and makes the portability election, she'll have her exemption when she dies. Plus, she'll also have the $12.06 million exemption, his, that he didn't use. So again, bottom line there, get everything set up properly ahead of time, and then make sure you get the good advice and make the proper elections after the death of the first spouse. All right, moving on here. Let's see. Mark D. Smith asks, what about loans that never get repaid in full? Had a few questions about that. So let's say a parent loans $200,000 to their child. The child never pays it back. It wasn't a gift, it was a loan. So every payment to a child is either going to be a gift or it's going to be a loan. Let's say this one was documented as a loan. And so when the parent dies, the parent doesn't have the money, the child has the money, but the parent has the note. The parent is owed $200,000, and that is an asset. That is an asset that should be worth $200,000. So it's an asset that goes toward the value of the estate of that parent. Cermex Flomex asks, if I donate $16,000 to anyone, would that be a tax deduction for me? Again, some people confuse the income tax with the gift and estate tax. They're completely different. They're not related. They're not unified. So no, if you make a gift, whether it's more or less than $16,000, you don't get any kind of income tax deduction for that. Brandon Life and Family asks, so if my estate is under $12 million, no tax is owed after I die, but if it is larger than that, I will pay 40% on the difference. Yes, you're exactly right. So if someone dies and they have a $20 million estate, leaving it to their children, for example, the 40% tax isn't assessed to the first $12.06 million. The 40% tax is assessed only on that $7.9 whatever million dollars over and above the $12.06 million. Mad Max asks, question, but do the recipients have to report the money received if under $16,000? Another good one. Recipients of gifts don't have to pay income tax. SoCal Cycling asks, so if you give someone $200,000, nobody owes any taxes? No, the recipient doesn't have to pay taxes. The donor doesn't have to pay taxes either, but they have to report on a gift tax return that they used, by making a $200,000 gift, they used $184,000 of their $12.06 million estate tax exclusion amount. Mark Pang asks, if a parent gives a gift of $15,000 for 10 years to an only child and then passes away, would the $150,000 be deducted from the total exemption of $12.606 million? So at time of death, the most the parent can hand down without paying estate tax would be $12.06 million minus the $150,000. No, that's the whole idea behind the annual exclusion. As long as that parent had kept their gifts within the $16,000 annual exclusion amount, for the 4 years prior, it was $15,000. For a few years prior to that, it was $14,000. As long as those gifts year after year after year after year are within those limits, not using any of the $12.06 million. So you'll still get the $12.06 million when you pass away. Frank Spence commented, I assume from what you said, and you may have said this, but if you give more than the yearly exemption of $16,000 or $32,000 as a couple, the extra amount goes against the ultimate estate tax exemption and whittles away at that a bit each time you give more than $16,000 or $32,000 a year. That's exactly right. Peter Maniac asks, so for the person receiving a gift of $16,000 or less, it is not considered taxable income or income that they must report on their 2022 returns? I'm only repeating a fraction of the questions about the recipient having to report gifts as income. They just don't have to do it. Jerome Patu asks, does this only apply to giving cash, or is there any way to give portion of your real estate to your kids per year? Yes, all this gifting, it's not limited only to cash. There are gifts made every year of real estate interests, of business interests, of stock. It's just you can give away up to $16,000 of fair market value. So when people do give away real estate, it's a little tricky because real estate values are subjective. And then there's so many title issues and county and parish and recording issues that take place when you give away portions of real estate. So most people, when they want to give away real estate as part of their annual gifting, they will transfer their real estate to a company, typically a limited liability company, also known as an LLC, and then they'll give away small ownership interests in that company. They may have to get that real estate appraised when they make those gifts to be able to really figure out what percentage interest in the company can they donate to stay within the $16,000 annual exclusion limit. Nicholas Miller asks, can you gift to your spouse? You can actually gift an unlimited amount to your spouse, and so there's no $16,000 limit. You can give $160,000, you can give $1 million to your spouse, and you don't even have to report it. The idea there is now those assets are in your spouse's estate, and when your spouse dies, they'll be part of your spouse's estate for estate tax purposes. But good question, unlimited. Spouses can make unlimited gifts back and forth. Francis Lim asked, is the estate tax going to be changed from $11 million to a $6 million exemption? Yes, if Congress does nothing, then our estate tax laws are scheduled to what's called sunset. It's just the way when the laws were passed years ago. On January 1st, 2026, you see this exemption, which was $11.7 million for 2021 and is $12.06 million for 2022. It increases every year based on some inflation adjustment factors. However, if nothing changes in our law, then on January 1st of 2026, that estate tax exclusion amount is going to be cut in half. And so that will happen automatically unless Congress does something to change it before then. So there you go. And I liked when Fond of the Duh said, just wanted to get my fantasy straight if I ever buy a lottery ticket, but it's like double tax. If you paid tax when you earned it, if I won millions in a lottery, he says, paid about half to taxes and divide the rest between my children while still alive, would they also be paying 40% gift tax plus I pay gift tax? Well, a fantasy it may kind of turn into a nightmare there. Yes, if you do win the lottery, those hundreds of millions of dollars of lotteries, yes, you'll pay 40% income tax or more, depending on your state, of income tax. So about half of it goes to income tax. And then, as you say, if you want to give it to your children, you'll use up your estate tax exclusion amount by making the large gifts, and then you will owe 40% gift tax on the taxable portion, the portion in excess of the $12.06 million. So yeah, it gets hit pretty hard if you not only win the lottery, but then when you transfer that to your next generation, either as a gift or if you leave it in your estate and leave it to them, it'll get taxed in the form of the estate tax. All right, hope all that helps. Make sure you like, comment, subscribe. We'll see you next time.